Hey traders, welcome back to this week's stock market forecast. We're going to be looking at the global indices before dropping down to the sector level in the US stock market. And we're going to be looking at the best stocks to buy now and the best stocks to sell now in the US stock market heading into next week. And I want to show you in the S&P 500, you can see we've actually started to peak and we're starting to reverse in the performance metrics, even though we're making new highs. And this is just one of the quantitative signs that I'm going to show you in today's video, is pointing towards risk off coming into markets and a correction at some point in the near future. Okay, so kicking off with the global indices, and I'm just going to click the in play button here, and this is going to separate out those indices which are above 50 and getting stronger, those which are below 50 and getting weaker. And you can see we do have small caps in the US still as the number one long idea heading into next week. The TSX out of Canada, a really good performer, been highlighting this to the upside in past weeks, and also the Dow Jones to the upside. We'll also look at the KLAC to the downside, and we'll look at the STOXX 50 to the downside as well. And we'll also have a look at the S&P 500 and the Nasdaq just to keep tabs on where they're at, and I'll show you the levels for those as well in today's video. Now, the final thing to note before we move on to the charts is you can see the VIX, which is our key risk on risk off trigger, is still in the negative side of performance metrics. Whilst it's been down there, I've been telling you I've been favoring long setups. I've been having a bullish bias, and we've seen stocks moving higher, small caps taking out their highs. I still have a bullish bias because of this. However, take note of the fact that the S&P 500 has peaked and reversed, and also the Nasdaq has as well. And when we move on to the sector levels, you're going to see the internals of the stock market are starting to look a little bit wobbly. Okay, so kicking off the global indices with small caps, this is RUT in the US. You can see we took out the all-time high at the 245886 and been consolidating under it. So I'd be looking really for one of two things. I'd like to see the small caps index coming back down, taking out the 2359. And of course, we're looking at here in blue the probable range for next week. Once we start to trade outside of this, the odds of a reversal back inside are greatly increased. It's about 70% chance of reversing once you breach these levels. And then we have the extreme probable range, which means that if you start to trade outside of here, you have roughly a 9 out of 10 chance of pulling back inside the gold levels. So anytime we're above or below the blue levels, we're looking at kind of overbought or oversold intra-week. This is where I'm looking to pull the trigger on long or shorts. For those of you familiar with the weekly Forex forecast, which went out yesterday, this is exactly the same setup that we're looking at here, just with global indices and US stocks. So if we start to come down and take out the 2359.23, this is where we become oversold intra-week. This is where I'm going to step in. You can think of this as the buy zone. And I'm going to start to look for reversal patterns. So we're talking about inverse head and shoulders, double bottoms, and I'm going to look for a 1 or 2 day reversal. And I'm looking to capture about 1 or 2 days out of 5. That's really the goal anytime I pull the trigger on an asset with these short-term trades. The second thing you can look for is if this blasts through, although it's unexpected, if we take out the lower bound and we come all the way down to the second lower bound, you can see there's a prior low here. This is where we turn extremely oversold intra-week in an asset that I want to be long. So whether I'm already long or not, and in yesterday's video, the weekly Forex forecast, I went through a few examples of Forex trades which moved against me, and I used the upper and lower bounds, which are highlighted in gold, as a risk management tool to cost average those and get them out of break even. Exactly the same here with stocks. If we take out the 2283.73, we become extremely oversold intra-week. Whether I'm long already or not with a position, this is the second place I'll look for a 1 or 2 day reversal. And the third thing is you can look for the intra-week breakout, but because we've traded into the all-time high, I would look for this to consolidate and probably break above it. And then if it comes and pulls back, you get that test on the overside. So we break the all-time high, pull back, test it, and then you can look for a move up to the profit taking target next week at the 2510.22. But I can either be long the Russell or do nothing. I cannot short the Russell next week. Next is the TSX, the Canadian benchmark, a market I've been highlighting to the upside for the last few weeks, and it's really outperformed. This is one, if you were long or doing nothing, this was a really good opportunity. So again, I can be long or do nothing. I cannot short this market. I want to see, as always, this coming down and taking out the 25254.26. If it does that, especially if it pushes through we enter this kind of buy zone and then we take out the prior high and stair step it. This will be a place I'm going to drop down to lower time frames, look for those reversal patterns for a 1 or 2 day reversal back inside the range before the end of next week. If we blast through here and take out the 24860.53, and I would love to break through here and take out these lows. Now, it would mean that we're probably looking at a reversal in this benchmark, because if you come all the way to the gold upper or lower bound, that's abnormal momentum. It's not expected, and it means something significant has happened. Usually it's a trend change. But if we were to take this out, whether I'm long from around here or not, the 24860.53 is the second place. I'll be looking for a 1 or 2 day reversal to the upside. And the third and final thing, as always, is look for the pullback to the moving average, whether it trades below it or into it, and then the re-break higher. And that is where the moving average follows. And you look for that first pullback into the moving average and the push away. That's your bull flag set up into the target to the upside, the upper bound at the 26041.73. Next is the Dow Jones. I can either be long the Dow Jones or do nothing, cannot sell this market next week. And alongside the Russell, it's been outperforming. So if I am going to be long one of the US benchmarks, I'd rather be long small caps, or I'd rather be long the Dow Jones than the Nasdaq or the S&P. But the Nasdaq and the S&P will probably go up as well if the Dow Jones and the Russell do. But I just would prefer to be in the Russell or the Dow Jones, because if all of them go up, the Dow Jones and the Russell especially are likely to outperform, so you can get better returns on them. So what I'd like to see in the Dow Jones is exactly the same setup as we're always looking for. Comes down, breaches the 4423.29, so breaks below the bottom of the range for the week. This is where I'm going to start to look for reversal patterns, double bottoms, inverse head and shoulders, and I'm going to look for that 1 or 2 day liquidation which pushes this back inside the range. And again, these are, for those of you watching this for the first time, these are the setups that I take in real time with GMT members throughout the week. Everything is time stamped, everything is recorded and accounted for. So what we're talking about here in the videos is what I'm doing in real time during the week with members. If we blast through here and take out the 43557.93, whether I'm already long and this has moved against me, I'm looking to risk manage it, or if I get an initial opportunity from here, this is the second place from below this level. I'll be looking at a 1 or 2 day reversal to the upside. And the third thing, as always, you can look for the intra-week breakout, because it's a strong market, because it's a long idea. You can look for those breakouts to the upside. Pulls back, breaks below the moving average, and then it breaks back above it. Moving average follows it. And look for that first kind of tuck into the moving average and away, into the profit-taking target, top of the range at 45587.00. You're not going to get breakout trades and bull flags in every market we look at, but if you're looking at all the markets, you might get a handful of them. You know, you only need 2 or 3 decent ones in a week, and that's where most of your returns will come from. You don't have to trade every asset every single week. Next is the S&P 500. Now, again, the markets we just looked at are the ones I prefer to the upside, but on balance, I still favor long setups in the S&P. If we pull back, the bottom of the range is at the 5947.72. That's where, if we breach this, I'm going to start to look for those reversal patterns for a 1 or 2 day reversal back inside the range. If we blast through here, the bottom of the range marked in gold is actually sitting right at a prior low. So if we did do that and we took out this level, just for next week, the 5863.06, this is where I'd be looking for a potential 1 or 2 day reversal as well, whether I'm long already or not. And the third and final thing is, if we pull back to the moving average, break below it, and then you break back above it, again, look for that bull flag opportunity. I'm on the 1 hour chart here, pulls back, and then you get that rally into the top of the range next week at the 6117.03. Great profit taking opportunity. Now, just bear in mind, if we were to come all the way down to this second lower bound and take this low out, that would actually be a double top with abnormal momentum. That would suggest we are reversing the S&P. What I don't like about the S&P 500 is that we've peaked and reversed in the performance metrics, just as we looked at in yesterday's weekly Forex forecast with the Japanese yen. That often precedes tops in these markets. So I'm a little bit wary. I think maybe we've got a couple of weeks, few more weeks, maybe December to the upside, but I think we could start to see risk off coming in, especially in Q1, maybe even in December. And the final benchmark to the long side is the Nasdaq. I don't really like Nasdaq, and I don't think this is great for intra-week breakout trading, because look at it. I mean, the other markets are making new highs. This can't even make a new high. So if I'm going to buy anything, I'd rather buy the markets making new highs, the ones that are outperforming in the Hedge Dash quantitative analytics platform. If we get the Nasdaq coming down, taking out the low at the 20446.22 and taking out this low, I will step in. I will start to look at the very least for reversal patterns to see if there's a 1 or 2 day reversal. But if we get the same opportunity in the Russell or the Dow Jones, I'm going to be buying that instead. If we break through and take out the 19962.08, this is the second place next week. I'd be looking for a 1 or 2 day reversal to the upside in the Nasdaq. And those intra-week breakout stuff, I would leave that. If these markets are going to break out intra-week, the Russell and the Dow Jones would be better long opportunities. But those are the levels for the Nasdaq next week. Okay, so let's have a look at some of the markets I like to the short side in the global indices. And it is the KLAC, which is the French benchmark still. Really underperforming all the other benchmarks. If we do start to break higher and you get some of those intra-week breakouts into the upper bounds in the markets we just looked at, that does set up the opportunity to step in and look for shorts. There is a gap close here. That would be a nice setup. Look for shorts above the 7388.41. I reiterate, on balance, I'm still bullish. But if the opportunity arises, I will be looking to short some of the weaker benchmarks as well. This is where we turn overbought intra-week. We enter the sell zone above the 7388.41. I'm going to start to look for bearish reversal patterns. And I need to see these patterns coming in first. I don't usually just short at the level. That's where we become overbought. Now I'm looking. Now I'm seeing if we can get those buyers liquidating their positions because they've made a mistake, and we can capitalize for 1 or 2 days out of 5. If we blast through here and take out the 7541.72, this would be a sign of a much bigger reversal in this market. That's why it's not expected. But if it does do that, the second place I'd be looking for a 1 or 2 day liquidation would be above there. And the third and final thing, you start to pull back and you break back down below the moving average with momentum. You want to see momentum. You want to see these things breaking and then pulling back. That's going to be the opportunity to look for a pullback into the moving average. And you can look for those short opportunities down to the prior low. And in this case, the profit taking target to the downside, 7081.80. The next global index that I like to the downside is the STOXX 50. Again, this has been a market that I've really been looking at either being short or doing nothing. You can see every time it's pushed higher, sells off, pushed higher, sells off. And we've not been seeing the outperformance in the European benchmarks like we have in the US. So I still favor shorting Euro stocks if we get the opportunity. The opportunity would come if we can breach, in this case, the 4900.28. We turn overbought intra-week, we enter the sell zone. This is where I'll be looking for those reversal patterns for a 1 or 2 day reversal. If, as always, we push all the way through the sell zone and come out the other side, especially if we take out this high as well, which we would if we breached the second upper bound, the 4996.41, whether I'm short already or not, this would be the second place I'll be looking for a 1 or 2 day reversal in this market. And the third thing, as always, you can look for the pullback and then the intra-week reversal where you break back down below the moving average with momentum. It pulls back, turns around, and it hugs it. And then you get the sell-off into the lower bound, in this case at the 4708.01. But I would imagine if it does that, you're going to also take out these lows over here. Good profit-taking target in the profit-taking zone. And the final benchmark I like to the downside next week, for those of you who watched the weekly Forex forecast video yesterday, you'll know the Japanese yen is the #1 long theme heading into next week in Forex. So I'm going to be looking at currencies short versus the Japanese yen long. And when you get an outstandingly strong or weak currency, this affects the benchmark in the opposite direction. So a stronger yen is deflationary. It's going to put downward pressure on the Nikkei. So I do like the Nikkei to the short side as part of my watch list. So any pullback in the Nikkei next week, if we do manage to pull all the way back, there's a nice double top over here. Well, it's not quite a double top actually, because we pull back, we don't take out the prior high. So it's actually more of a second wave. We pull back, we fail to make a high, and then we break through. Either way, this is a nice kind of breakout area. We've broken down with momentum. If we pull back, retest this, and we breach the 39390.12, this is the sell zone. I'd start to look for those reversal patterns for a 1 or 2 day reversal. If we blast through all the way up to the 40572.22, very unexpected. These are not expected to be taken out, these gold levels. They're more of a backup in a kind of unexpected scenario. Something happens, abnormal moves take place, and we have somewhere we can risk manage it where the odds actually turn even more in our favor. So above the 40572.22, if we were to get there, which I don't think we will, But if we were, that would be the second place I'd be looking for a short, whether I'm already short from here or not. And the third thing, as always with these markets, is look for it to trade back above the moving average and then start to break down. It's already kind of done it, it's broken down, and we're kind of hugging it now. So it may just start to go straight away. But if you get that setup and you get the re-break, look for it to pull back, hug the moving average, and you can look for that bear flag setup, essentially a correction breakout. And then you get the bear flag setup into the lower bound, bottom of the range at 37025.93. Again, I like the fundamental aspect of this where we have a much, much stronger currency. Therefore, it puts downward pressure on the benchmark. Okay, so dropping down from the index level to the sector level. And if you remember earlier in the video, I said there are some quantitative signals that are suggesting the internals of the stock market are a bit wobbly. Well, you're looking at them now because XLU is the most risk-off sector, and it's now in the number 2 spot. It's starting to outperform. And in fact, we're going to be looking at some stocks to the long side in XLU in today's video. Another risk-off signal on the internals of the stock market is XLY, consumer discretionary, one of the most cyclical risk-on sectors, now peaking and reversing. And we're also seeing XLP, which is one of the most risk-off sectors, in fact, the second most after XLU, troughing and reversing, so it's getting stronger. And at the same time, XLK, which is the biggest weighting in the S&P 500, is now in the negative side of performance metrics. All of these are showing that the internals of the S&P 500 are shifting towards risk-off. We see the S&P itself peaking and reversing in the performance metrics. Everything is pointing to potential risk off and a near-term top coming in the stock market fairly soon. So in today's video, we're going to be looking at 2 stocks to the long side in XLF, 2 stocks to the long side in XLU. We're going to look at 2 stocks to the downside in XLV, and we're also going to look at 2 stocks to the downside in XLK. Okay, so kicking off the individual stocks with 2 XLF bank stocks, starting with Charles Schwab. We're looking at the ticker SCHW. The lower end of its weekly probable range is the 80.07. So what I want to see is I want to see this market come down next week, take out this range low. And at the same time, what would be great is if we took out this low. This is where we get confluence. We become oversold intra-week in a market that I'm looking to be only a buyer. Can't be selling this. And at the same time, we trade into a previous support area. So this is where I'll be looking for a 1 or 2 day reversal back inside the range next week. If we blast through there, take out the 77.38, this would have to be some very unexpected bearish catalyst. That is where I'm going to be looking also for a 1 or 2 day liquidation to the upside, whether I'm long already or not. And the third thing you can look for is look for this market to come down, take out its moving average, and then you can look for the break back above it, pulls back, hugs it, and then moves away. So you get that kind of bull flag setup intra-week. And again, in this case, the profit-taking target, the top of the range, sitting at the 85.44. The next bank stock I like is PNC, and you can see we had a big gap up and a breakaway and push higher. We're now making our way higher, and I would love for this to come down next week and take out the 208.40. This is where we turn oversold. We start trading below the bottom of the range. I'm going to be looking for a 1 or 2 day reversal back inside the range. If we blast through there and take out the 202.08, probably means there's been some kind of a reversal for whatever reason. It's the second place. I'll be looking for a 1 or 2 day reversal to the upside, whether I'm long already from higher up or not. And the third thing, as always, you can look for the consolidation into the moving average. And then you get the breakout. The moving average tracks higher. It pulls back. And you can get that bull flag set up. Usually you only get one into the 221.03, top of the range next week in PNC. The next stock I like to the upside is ticker XEL. Now this is a utility stock. We're moving on to utilities. And if we're starting to see the internals of the stock market looking poor, and this is going to lead to a reversal in the near future, being long some of the utility stocks is likely to outperform. So I do like this. If we pull back, especially if we can come back, stair step this high, and we can also stair step, you break the high, pull back and a retest. This is where I'd be looking for a 1 or 2 day reversal to the upside. So we take out the 70.52. I'm going to drop down. I'm going to start to look on lower time frames, intraday time frames for reversal patterns, double bottom, inverse head and shoulders, looking for that 1 or 2 day liquidation in the opposite direction, back inside the range. If we blast through and take out the 68.49, also has a very nice prior high below it. This is the second place. Whether I'm long already with one position or not, this is the second place I'll be looking for a 1 or 2 day reversal. And a third thing, you can look for that intra-week breakout back above the moving average, tracks higher. And you can look for that bull flag setup into the top end of the range and above this at the 74.59, great profit taking zone above the 74.59 next week in this market. And the fourth stock I like to the upside next week that we're going to look at is CNP in the utility sector. Again, very nice strong uptrend we've got. If we can pull back, going to be looking to buy the dip below the 31.81. This is where I'll step in, look for those reversal patterns. If it keeps on dipping and we test this prior high, not expected to happen, but if it does, we're probably looking at a bigger reversal because the momentum shouldn't be happening if this trend is going to continue. But if it does that, below the 31.00 is the second place. I'd be looking for 1 or 2 day reversal to the upside. And the third and final thing, you get your intra-week correction and look for the break with momentum above the moving average, and then look for it to pull back, hug it, and that's where you get that intra-week bull flag into 33.42. Great profit taking target next week in this market. Okay, so moving on to 4 stocks I like to the downside in the US stock market, starting with XLV stocks. So we're looking at healthcare stocks. TMO, this is a market I liked to the downside last week. We did see it pull back, taking out the upper bound. And usually if a market pulls back and takes out its upper bound and it doesn't reverse like last week, like this, the following week that turns into, because the levels reset, turns into a kind of intra-week breakdown into the lower bound. So I wouldn't be surprised to see this with an intra-week breakout to the downside. However, if we can pull back, look at this really nice low over here. Really nice break, pull back, key area of broken support, turns resistance at the 54481. This is where I'll be looking next week for those reversal patterns for a potential 1 or 2 day reversal to the downside. If we blast through and take out the 560.00, we've probably got some kind of trend reversal on our hands because this should not happen if this is going to continue down. And that's the second place. Above there, I'd be looking for a 1 or 2 day reversal. And the third and final thing, again, I would not be surprised to see this happen because we took out the upper bound last week and didn't reverse fully from it, is if we break down intra-week now, the moving average follows it, and that's where you can get your bear flag set up into the lower bound at the 514.44. The next stock I like to the downside in the XLV sector is LLY. This is a market that if we can push higher and take out the 83201, we have quite a nice high sitting above it. I'd like to see it break out, take out this high. That would be great. This is where I'd step in and look for momentum to fade and look for that 1 or 2 day liquidation to the downside. If we blast through and take out the 86867, it means something abnormal has happened. Very often you get this on kind of earnings reports. I'm not looking to trade any stocks into earnings reports or hold through earnings reports. So Eli Lilly shouldn't really be doing this next week. If it does, it means there's probably some kind of trend reversal taking place. Either way, whether I'm short already or not, this would be the second place next week. I'd be looking for a 1 or 2 day liquidation. And the third and final thing is that intra-week bear flag setup. In this case, maybe we come up, take out the high, we double top, and then you get the reversal. Breaks the low, pulls back, and that will coincide, with a moving average coming down. You get that sell-off into, in this case, the 758.68, and I would say a gap close here would be a great profit-taking target in this stock next week. I'm wrapping up the video with 2 XLK stocks. It is AMAT, which is in the Nasdaq, so don't forget the Nasdaq as a benchmark is underperforming as well. And if we can pull back in AMAT, we get a nice kind of gap close, partial gap close. I suppose the full gap close would be here. But breaching the 182.74, this is where I'm going to start to look. Maybe we close the gap here and then we start to run out of momentum. I'm going to start to look for reversal patterns for a 1 or 2 day liquidation. If we blast through, the 190.78 is where we turn extremely overbought intra-week. This is the second place. Whether I'm short already or not, I'll be looking for a 1 or 2 day reversal. Again, it would probably signal a bigger reversal in this market if it were to take this level out. And the third and final thing, as always, you can look for it to pull back, break through the moving average with momentum. The moving average tracks down. And then, very good example here. Pulls back, there's arguably one, tucks in, pushes away, pushes into it, and then starts to move away, you get the gap down. You can look for that pullback and the test of the moving average or hugging it, and then the sell-off. Down to the 166.67, bottom of the range next week for this stock, and also into the prior lows. Great profit-taking area there. And closing the video then with KLAC, another Nasdaq stock. So now we've got that setup where you've got a weaker benchmark in the Nasdaq, which is underperforming. Within that benchmark, we're also looking at the sectors, and you're looking at a technology stock, which is not doing too well. Technology as a sector is underperforming. And then we drop into the technology sector, and KLAC is one of the worst performers in the XLK sector. So I do like this to the downside. Any kind of pullback in this market, if we breach the 679.52, I'd like to see it take out this high. Stocks are more volatile than Forex, so you have deeper tests of these levels very often with stocks because it's a more volatile asset class. But if we breach this, especially if we take out this high, I love it when we have a breach, we turn overbought and then hit a resistance, right? That's a great opportunity. Or we turn oversold and we hit a price support. That's a great opportunity to look for the bounce. So I'm going to be looking for any kind of move in this sell zone up here. I'm going to start to look for those reversal patterns. If I get them, the 1 or 2 day reversal to the downside, very often it liquidates for 1 or 2 days worth of movement. If we blast through here, we take out the second upper bound at the 712.01. Not expected to happen, but if it does, then we have to, especially if we're already short, be looking at risk managing. Or it takes this out. What else does it signal? It signals a bigger trend change. And finally, you can look at that break lower below the moving average. The market pulls back, hugs it, and you can look for that bear flag setup into the lower bound, the 614.53, and onto the prior lows here as well. Again, very much like this. Breaks it with momentum, corrects, tucks into it, sells off. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-Trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge-platform is included with every GMT membership.